Yes, I know. I'm saying don't save. How am I contradicting myself? Okay, so I'm not saying don't save money. I am. But just don't put your money in a savings account. Now, this has got to be your own decision, and this is not financial advice. I'm not a financial advisor, but I am going to show you why myself, I do not put my money in a savings account. Right, we're going to go over to the ANZ Bank website, and this is a term deposit, right? So a term deposit, you have to have a minimum of $10,000. But when you're trading stocks, you don't have to have $10,000 to start making money, right? And the percentage on this 1 year term investment is only 0.80%, which is like, oh, do you know what? I'm just going to show you. So if we put in here $10,000 to invest for 1 year, let's let the calculator work this all out, right? And to me, this is crazy. $80, $80 freaking dollars. So you're going to take $10,000 that you've worked so hard and saved that money, and then invest it for 1 year and only make $80. Like that 0.8% is hardly anything. And that's why I'm saying don't have your money in a savings account, because you're literally losing money. You want to take that money and make more money with it. Now I'm just going to do a quick comparison with the stock market. Now the stock market has been down last week, but if we just look at the most up and the most down, you can see these day percentages. Now this is how much it's gone up in just 1 day. So on the savings account, we're talking like 0.8%. And the most up here, we're talking like 64.08%, which is just in 1 day. You don't even need to wait a whole year to make a profit on that money. You could start making a profit on it in 1 day if you just invest in the right company. Now, obviously, the market does go up and down, and yes, you can invest in a stock and then it can go down. I would not take $10,000 and put all of the money into just one stock. I myself would spread that across a selection of companies and shares of companies that I think have the potential to grow, or they're currently down because of whatever reason, whether that's news or just the market on that day, or perhaps there's been a big sell-off and people are going to rebuy. So I would then, spread it out across a few different companies so that the risk is lower by doing this. Now, if we just look at something perhaps like Amazon, as you see, Amazon is at 3,092 at the moment. It has come down. The whole market has come down in general. So when it is down, this is a good time to buy, right? You don't want to be buying when it's going up, because you risk having it coming back down again. But if you buy it at the lower point on this lower support line, then you're more likely to make money as it then starts heading back up again. Now here's another stock, CCIV. Now CCIV went all the way up to, I think, something like 61 or 62 off the top of my head, and the reason why it was going up is because people were waiting on an announcement to see whether they were going to merge with Lucid. So that merger was announced, and then after that announcement, it dropped all the way down to where it is currently. So to me, this is an opportunity to buy. If you look here, the last trading day, it was a 10.53% increase in just 1 day. Now, if you compare that to the interest you're going to get over 1 whole year of waiting on a term deposit, now it's a massive difference. Now I'm back to the dashboard. This is the account that I opened for my daughter. We started of, I put in 200 New Zealand dollars. That landed me with 137 US dollars. So as you can see, we are down at the moment. Total down amount is $24. The last trading day we were up $4.34. So the total amount we're down is $24.80. Now, trading stocks and trading in general is actually a test of your emotional maturity, right? Now, a lot of people, depending on the relationship they have with their money, they freak out. When they start seeing red, they freak out. And they're like, oh my gosh, I've got to sell. And then also sometimes they freak out when it's going up. Like, well, I made a profit, I might as well just take it now. But then they take the profit too soon. So a lot of learning about stocks is also learning about your emotions and understanding your emotions while you are trading. You need to think of this as a business, like as if you have to buy stock to sell. When you buy that stock, it costs you money. So if I am going to open up a business selling toys, my investment in buying the toys is then going to make me in the red. I'm not in profit because then I need to sell those toys in order to make the money, right? So you've got to look at it that way. Think of it in that sense. Like I've done that myself in my current business. At the beginning, my relationship with money was tight because I was used to being on a benefit, and I'd gone out and spent $1,000 or $2,000 on stock, and I'm like, what the heck? This is like freaking me out. Also spent $1,000 on machines, like $14,000 on a machine. But I needed to spend that money to make money, right? So when you see things in a red, you got to learn to be okay with it. And that's why investing, different when you start out, I'd say start with a low amount of $200, and if that's an amount that you can afford to lose. And I'm not saying you're going to lose, I don't want you to lose, but having that mindset that, okay, I'm going to risk $200, and if I lose it, I lose it. Now, stocks is a lot less risky than, say, like Forex and trading Forex, which is what I actually started with because they have a leverage. A lot of the time, if you buy a stock low, you just keep it there and you don't sell it, it will probably go up again unless something really bad happens. Look, I'm not a financial advisor, and these are just my opinions. So whatever decision you make has to be your decision. But I'm just saying it is an emotional thing, and you need to understand that it's okay to be in the red. And I'm showing you my daughter's account because I want you to see it is currently in the red now. And if we just wait, you're going to see it go up. So I want you to see it with your own eyes so that you can see being in the red happens. And it is normal. The stock market goes up and it goes down, and it goes up and it goes down. This is how it works. And sometimes it goes up and it keeps going up. And that's awesome. And then sometimes it goes down and it keeps going down, depending what you're invested in. So there are times when it is going down where you've heard news, you've heard things about the company, then you've made that decision, right, it's going to keep going down, take the loss. Now that's it from me today. I hope you guys have a good day. Please do subscribe and leave comments, ask questions. Let's help each other. We are in level 2 in my city, which means my business has come to a halt, so I might be able to do some more videos.